Well, the US economic calendar is jam-packed this week. The investors holding their breath for the release of the latest FOMC minutes, which are due out early tomorrow morning, and that's Eastern Daylight Time here. Well, Federal Reserve Chairman Jerome Powell and Vice Chair Richard Clarida are also set to provide insight with speeches on Thursday. Well, for more on what to expect, I'm joined now by Peter McGuire from XM. He's at the desk. Peter, thank you for joining us. So let's start with the US. I mean, what are you expecting to come out of the mouths of these Fed governors later this week?
Well, that's a very, very interesting question in itself. You know, quite simply, where we're looking, I feel as though that if you're looking at the Fed fund futures rate, they're pricing in that there'll be no rate rises, 68% chance there'll be no rate rises in 2019. So they're reading the market, and a 25% basis cut by January 2020. So where we're looking as far as Jerome Powell, over the next 48 hours, we've got certain governors speaking and the Fed chair, and it's going to be one of looking and seeing the global picture. What's happening as far as domestically in the United States? We've got the consumer at record levels as far as spending power, low unemployment, but we've got manufacturing under the whip. So I think they're going to look at the context of the overall global numbers.
Well, just broadly on the local market now, as I said earlier, up 0.5% today. I think it was up 0.7% yesterday. And I think also up on Monday. So doing quite well in the first full trading week of the year.
Absolutely.
Do you think that that's kind of setting the tone for the rest of the month?
Well, I think so. Well, it's certainly going to set it for the rest of the week. You know, quite simply, if we see what happens as far as Powell's comments over the next 48 hours, it's going to bid, I think, the Dow up, certainly the S&P, the broader market, and that'll capture Asia and take on board, I think, you know, and add a little bit of steam behind the Aussie market. So I think overall it's going to be a nice week. I'm not expecting any surprises Fed-wise, and I don't think either the President is either. So I feel as though that they're looking, those very strong numbers coming out of retail sales in the States in December are going to flow nicely into the market, and that's where I think that that's going to help us here as well.
Well, speaking of upward movements, of course, the oil price has also been moving up recently. I think it's on its way back to $50 a barrel.
Yeah, nearly 50 for WTI.
So what do you interpret from that? Is that a sign that the economy is strengthening?
Well, I think globally it's certainly looking, it was probably oversold to the downside, Adam. So that's the first part. The second part is those OPEC cuts. Inventory levels, and they came into play on the 1st of January. Inventory levels are falling. And you're looking at what's happening as far as that global demand picture. Also take on board that the market was probably not only was it oversold, but it's really ratcheted up very quickly from those lows. Brent's up, WTI's up, and there's probably the chance you're going to see another $2 to $3 to the upside this month. So I feel as though that it'll capture 50, 51 for WTI, and every chance you'll be probably punching near that $60 level for Brent.
I just wanted to ask you about the prospect of a trade agreement between China and the US. That could be a massive boost to markets, I imagine, if there's some solid agreement. What sort of upside could we be seeing with such?
Well, for that, I mean, that's also playing into that global picture, and I just want to revert that back to the oil market. That's the global barometer. So those trade talks have been very positive over the last matter of days. They feel as though that there's strength, and if it's going to work it through a deal, then that's going to be, I think, a very, very strong stimulus to the global markets. Certainly the Chinese market and, of course, the US will be in that tailwind. We'll get a push up from here, and it's all a good storyline. I think there's a potential for it to really move strongly. If you look at the Dow, it's up the best part of 1,500 points since Christmas. So it's been a very strong rally since about December 23, December 24, and that's going to help us here.
Yeah, now, of course, despite the generally good news that we're seeing on markets, many central banks are backing away from talk of monetary policy tightening. The Bank of Canada, I think in recent weeks, for instance, has said that it's not going to hike rates in the medium term. Now, of course, our central bank here has been saying that the next move is likely up, but pricing in futures markets, I think, suggests about 30% chance of a cut.
Yes.
How do you see that contrast playing out this year?
Well, they've got to look at a couple of things here. First off, you've got to look at the domestic economy and what's happening as far as, you know, retail sales, housing is a big component of that as well, unemployment numbers, and they've all been relatively strong. The housing market certainly on the east coast, Sydney and Melbourne is under the whip, so that's going to impact, I think, you know, as far as the Reserve Bank, what their projections are and what they'll do. But I think it's probably going to edge up higher. I think that 30% will probably go closer to 40% come February or March. If we don't see a rate rise, then there's every chance you're going to see that push further out. And let's see what the States does as well. So there's every chance it's going to be nearly a 50-50 by mid-year as far as rate reduction versus rate hike.
Yeah, so
and
far,
we've got a federal, we've got an election as well.
Indeed, certainly a huge risk there. Just on the house price issue, of course, they have fallen a great deal, certainly in Sydney, but we don't seem to be seeing much of an impact yet in the core economic figures. Does that surprise you? I mean, GDP growth and...
Yeah, GDP. I think it's what's going to happen is those resales, and what's going to happen as far as all of those greenfield projects and all of those apartments that are, awash with Sydney, because you've only got to go for a drive across Sydney, and it's quite remarkable. All suburbs, from Hornsby to Hurstville, out to the western suburbs, in the east, there's just that construction boom. There's more, I think there's more cranes here than there are in Dubai. So there's that huge boom, and is there going to be the uptake? Are the banks going to assist as far as buyers? The Chinese buyers we're saying there's a handbrake on those. So what's the impact? And as well, it's a little bit like buying in a futures market. You're waiting for the bottom. And at the moment, the bottom certainly isn't there, so there's probably a chance that this time next year it's going to be cheaper than what it is today.
Yeah, now, you just mentioned the federal elections, so I'm going to ask you about it. Most likely May, I suppose. What sort of risk could that entail? Let's say Labor wins. Of course, they do have a higher taxing agenda and, of course, major changes on the property front, at least with negative gearing.
Exactly.
Being proposed. What sort of impacts do you think that will have on the markets and sentiment?
I think it'll be bearish, I would say. I think it'll greatly impact our market. How that affects as far as negative gear and what the implications are. I mean, these are sweeping changes. Their talk of it, when it's going to be introduced, is how retrospective is it going to be? All of those factors need to be taken in because, policy can change once they're in Parliament. So, it's a little bit of an unknown. It's easy to speculate, but I don't think it's going to be a positive for Australia. I think it's probably going to be a bearish sort of outcome for our ASX and probably a lot of wage earners. And I feel as though that if you're looking at those higher tax rates, they're all going to impact, the spending power.
Yeah, well, just on one of Labor's other policies to basically end refundability of franking credits now.
Yeah.
Technical topic, but certainly affects many tens of thousands of people.
Yep.
Do you think that
probably
that
millions
will hit the ASX in any way, trading, or the attraction of shares?
I don't know. Well, I don't think there's going to be an attraction to cash because there's very little chance that you're going to see a rate rise this year. You might see something, but there's every chance, just as we know, 30% are saying it's going to be downside. So there's no attraction to hold cash. Property markets under the whip. And the only true market at the moment that's showing any potential probably is the equity markets. If you're looking at real estate, in equities, but if you're looking at real estate, you're probably going to look further afield than Sydney and Melbourne. So if you take on board those franking credits and all of that impact, it's not going to be a good sign for the banks, not going to be a good sign for corporate Australia, and from an investment standpoint, it's going to be another hit in the hip pocket, and you're going to see, well, where can you employ that capital for a better return? And that's going to be a very debatable proposition. I'm not sure what the scenario is going to be.
All right, well, we just have to wait a few months to find out.
Yeah, we'll know.
XM. Thank you so much for joining me.
Thank you.